February 1st, 2023. Can't believe it's already February. Um, yeah, trading recap for today. I could only trade up until sort of 2 o'clock ish. Couldn't trade sort of after this because I had to to do some other chores. So that kind of really shortened my day. I don't normally trade FOMC days, although this day I did have a very, very nice plan for it. Essentially, this was my overall plan. So this is the 20,000 tick chart. As you can see, we're in a bull channel. You have a spike, pullback, and three pushes. One, two. We made the third push today. So I was going to trade. I knew we were going to make a pullback today after that massive rally yesterday. So this is going to be a 50% pullback, and then we'll make the final second leg up. So that was my initial plan. I thought maybe I might catch the bottom, and there were some really good entries. There was a nice bull bar for me to have caught. I had a really nice measured move for this level based around this. Well, basically, I was looking at the way the price was moving, and I thought, okay, we have a measured move down here, which was here. So this would have been an interesting buy. I don't think I would have put my stop here though. I would have probably used a wider stop because it's an FOMC day, and I probably would have traded with just one contract. All right, so let's talk about today and what happened. So, all right, so there are some things that I've noticed that I have been doing, and I need to um, work on them. A lot of it has to do with my entries. Whenever I have a plan, I didn't think we were gonna get. I knew we were gonna get something. And I mentioned to my colleagues in Discord today that, at the open, we obviously did not have this space filled up. I saw that we had sort of started to do this because of this big, massive candle over here, which is a climax. It's funny, trends always start with a climax and they always end with a climax. So this climax will cause a reversal, possibly a 50% retracement, just like this, or just like this, more like this actually. So we got that. Um, but you see, because it's an FOMC day, you have to treat each part separately. It's almost like two different days. So you have this part and you have this part, which is a second day, right? And so I wasn't really sure I wanted to trade this. And because it's an FOMC day, I didn't know if I wanted to trade this, but I had a feeling this would happen where, we had this space here. And we have a second leg loading, and it's going to be a bull climax. And the FOMC is just always timed for these things. I don't know how the market is always set up, but it's always setting up for climaxes during big news events. So, um, so we started off with a double bottom, double top, which started last night. And you can see we had a wedge in the overnight session. We pulled up, pulled back, and then we came down again. And I assumed we'll have a two-legged correction, but I realized that actually what we're doing was one leg a sideways and a second leg sideways, and then the FOMC actually made four legs, two legs down. So I went long, and I'm not really sure why I was doing it, but I just went long because I saw a buy to close setup at the open. So two bull bars closing on their highs at the moving average. I also was suspicious of this setup because I thought you have two bear bars here, and then you're going this way. We could break above if we have one more breakout bar, but we didn't. This closes a doji, and that was the biggest concern for me. I said, oh my gosh, we have a bear bar. And then bar 7 being the news bar, this is bar 7, just changed everything. I should have bought the low of bar 7. Instead, I bought the high of this bar, which was not really good. If I had bought the low, my average price would be at the bottom here. And I don't know if you can see, I'm going to use the crosshair, but there's a gap between, and in fact, let me put bar numbers on, indicators, bar counter, there we go, bar counter, and then I'm going to put the crosshair on, crosshair. Alright, so there's a gap between 6 and 11 and 13. So my average, when I bought here, I bought one more here. Should have bought this low. And why would I have bought that low? Well, so when bar 7 was forming, I noticed we started to form a wedge. So actually no, this is it here. So this whole move this is bar 7 here. this whole move here. So we formed this pullback and then it got bought up. So I thought, okay, maybe this is going to be a failure. Maybe it might go higher. But that wasn't the case. We formed a bear bar. So ideally, I should have just bought this low, right? Because you know there are buyers here already. You've seen it here. You've seen it here. So this is going to be it. But I bought the break of this bar in anticipation that we would close the gap. But my average price was around about here. So that was a problem. So I kept on thinking about it. Went sideways for a bit. And I'm sure if I had bought this low, I would have been able to get out break even. So I bought one more here, or I think maybe two. No, I bought one more here. Thinking about it for too long. Brought my average price down, but by that point it was already too late. We had already formed the wedge and we're coming down. So if you look at the 5-minute chart, it's a two-legged correction. So we're going to get a second leg move down. Now, since we had done that, I started buying more as we're going down, thinking we'd have a double bottom here, would have a trap. We had the 240 MA here, so the 240 moving average, the moving average on the 1 hour chart was acting as support. And I ended up buying, I think, about 8 contracts at this point. Then this bull, yeah, we had 6 contracts here. Then this bull bar formed, which I thought was a really good buy at support. There was a double bottom as well at support. This would be a good buy with. I should just buy some more to bring down my average price. So I brought that down even further to this point. I initially was going to play most of this, but I thought, you know what, stick to the plan. You want to get out break even. What if this happens? Because I wasn't expecting this to happen. But then I think about it, you do kind of expect this to happen because you're expecting a very deep pullback today. You know, one leg, second leg. So I got out all of it there, and then I went long. And I asked the question, I was like, we're wedging, my stop's down here, probably not a good idea to go long. And I think some people did, and they got trapped. So you can imagine if, say, you bought this close, you'd have to buy this close, and you probably got out on that bull bar there. So anyway, got out for a very tiny profit and decided to just let it go. Now, I saw this here and I thought, oh, this is a wedge. 1, 2, 3. This would be a good buy. So I bought this and it chops around for so long, and then I just got the message that I had to leave. So I got out again, break even. And that was the rest of it. As I said, this would have been a really good buy, especially using this chart here. You can see those are very good. After this wedge, really good bull bar over here, only risking about 4 points, and look at what you could have made in the whole entire thing. And then this being such a strong trend, it would have been easier to manage on this chart than on the 5-minute chart. Yeah, so this is something this is one of those days where the FOMC looks so good. You have a two-legged pullback over here, maybe buy this bar. This one is a better buy. You could have caught this, but you're beginning to wedge, so you're going to get a deep pullback, and then this again. But all in all, that was my trading day. Yeah, so what am I expecting tomorrow? I mean, everything has worked out so far. I mean, all the setups I've had have worked out really well. This setup worked really well for yesterday, although I didn't trade most of the trend. I just traded part of it. And then this worked out really well. In fact, let me just mark the wedge from here to here, or actually you can just say this is the wedge. So that worked out quite well. Nice breakout. Now we have a wedge top and a climax that has broken the channel. So there's a 75% chance that we will reverse and try and test the bottom of the channel. 25% chance we'll go higher. I am skeptical. Oh, really? I'm skeptical that we're going to go higher because we tested this level. We just closed on it. We're also testing this level as well. So that is essentially what the market's been trying to do. We've been trying to get back to this level and possibly this level. We broke that trend line here. We've tested this level here. We probably pull back to the moving average. We're in a small pullback bull trend at the moment. So first leg pullback, second leg, and it's also a head and shoulders bottom. So there's a shoulder, head, shoulder. So therefore, that tells me if that is a Head and Shoulders bottom, this is the neckline of the Head and Shoulders bottom. The market may try to get back to the 4,700 level. So we'll see if that actually works. If it fails, it will go in the opposite direction for a measured move, just like it did. What was the last? Here we go. This was another Head and Shoulders bottom. This one failed here, and it went down for a measured move. So it's the same distance down here or possibly here. All right, so yeah, so very quick recap. Like I said, didn't really do much today. It was an FOMC day. Didn't really have much time to trade it. Yeah, tomorrow will be interesting if we get a trading range or we get a bear trend. I think more trading range, but however, we have these levels of supports to tackle. We've already started to come down. This is one. Let me use a 5-minute chart. Oh, sorry. Yeah, I was going to say there's some bars missing. Yeah, so we've already started to come down. We have the wedge top, 3 pushes, 1, 2, 3. First leg down, obviously minor, will pull back, maybe get down to this level, go into a trading range, and then we'll see what happens. Maybe we'll come down, and like I said, test the other side of the channel. All right, that's my recap for today.